session of the Bears and Bulls series for the year 2024. Personally, I'm excited to have each and every single one of you on here today. And I want to say Happy New Year to you, to our existing audience who always joins. And I want to say welcome to our new audience. I want to say a bigger welcome to you. Thank you for joining us for the very first time. My name is Mercy Okon, and I am a research analyst. I work at Pattern Securities. So I know you might have questions regarding what the Bears and Bulls series is all about. So yeah, the Bears and Bulls series is a webinar that is hosted by Pattern Securities in conjunction with iInvest. iInvest is our digital partners, by the way, and it holds once in every quarter. And the purpose of this webinar is to educate and inform our audience on the recent happenings in the equities market, as well as the macroeconomic space as well. So it's just to help you make informed decisions that can enable you, build wealth over time. And again, just in case you're wondering who we are, that's Pattern Securities Limited. So Pattern Securities Limited, we are a trading license holder of the Nigerian exchange, and we offer various services ranging from securities dealings on various financial markets, investment advisory, research on securities and companies, and we offer other ancillary services like stock holdings, recovering unclaimed dividends, and the dematerialization of shares, amongst every other service that we offer. So what should you expect to gain at the end of this webinar, at the end of today's session? To expect to gain understanding as to what has happened and what is going to happen in the stock market. You can also expect to gain some sort of investment strategies that you can implement, and at the end of the day, help you also achieve your financial goals, and expect to gain directions for recommendation on stocks to buy as well. Now, during the course of the session, please, if you have any questions, just leave them in the chat box, and I will be happy to attend to each and every single one of them at the end of the session. If you have questions for me, if you have questions for the speakers, please just leave your questions in the chat box, and all questions will be attended to after the end of the session. And we are also required to keep our mics muted during the course of the session to avoid any sort or any form of distraction. Now, our topic today is a very interesting one. It is equities frothiness, navigating the thin ice. And I can't wait to hear all that our speakers have to say to us today regarding that. So to help further do justice or dissect this topic, we have two speakers on board here, and two very grounded speakers, if I may say. Our first speaker is the head of investment research at Pattern Securities. His name is Oluwaseun Dosunmu. I know you can already see his face. And then our second speaker for the day is the head of products and operations iInvest, Ibilola Ashcroft. So welcome, Seun, and welcome, Ibilola. I'm excited. I can only hope that, our audience are also excited and are ready to hear all the information that you have to give to us today, so that we can get right on it and start, fulfilling our goals for the year, our financial goals especially. So thank you and welcome, guys. Now, Seun, like I said earlier, today's topic is very interesting. It's equities frothiness, and I'm sure the audience have lots of questions. So do you want to break this down to us, please? Thank you.
Thank you for that, Mercy, and thank you again for the opportunity to speak. I'm always so excited to speak to people about the market, because I actually have a passion for it. Now, basically about the topic, the equities market frothiness, navigating the thin ice. Now, we've observed that last year there was a major rally in the market, and it took a lot of us by surprise, because generally we know that during an election year, market activities actually slowed down. But last year we saw activities even pick up much higher than what we've ever seen. surpassing the highest point. I mean, even in 2008, surpassing the highest point we've ever seen in the market. So we believe that the market is at a delicate state, and trading during these times require a lot of caution. One of the comments or questions people have been asking is that now that the market is at a peak, is there going to be a crash? Is there going to be a bust and things like that? I mean, I won't say there'll be a crash. I just believe that with what is happening, with some of the strategies and points that we'll be sharing today, I believe that we'll be able to navigate these current times without getting our fingers burnt. So without taking much of your time, I'll go straight into the main meat. Now, our market is driven by information. I mean, this is one thing that we need to pay attention to every time. Information, information, information. I mean, that's one thing we also try to do to ensure that we push out important information timely and that is easy to also understand, because this is the difference between, one who will make profits and another who might actually get burnt in the market. So the information is key. Now, we'll be covering some indicators that would actually impact the equities market now on the global space. Now we have the crude oil, we have global inflation and interest rates. Now we look at crude oil because crude oil is the lifeblood of the economy, it's the lifeblood of the global economy. Whatever happens to crude oil actually has a major ripple. It has an effect on what would happen to every other indicator in the global economy. And obviously Nigeria is part of that. So generally, we saw that Brent crude prices, which is the benchmark crude oil price, benchmark commodity for crude oil that we actually monitor, it actually averaged around $80 per barrel last year. I mean, for the first half of last year. We also saw that crude oil prices actually closed lower than it opened last year. It settled around $78 per barrel. Generally, this was due to, the geopolitical tensions and the fact that major oil producers supply concerns generally on major oil producers. And we also saw that the OPEC Plus was actually managing, the supply and demand that we're seeing last year. So that actually impacted crude oil prices. We've actually seen that crude oil prices have been hovering around the 78, the 70, 80 regions. And we've had predictions that, crude oil prices might increase this year. For the global inflation and interest rates, we know that inflation globally has started to moderate, which is a good thing. It's a good thing because now that inflation has started to pull back a bit or reduce, we're seeing that central banks too have been, cutting interest rates compared to what we've seen in the last couple of years, especially from 2020. So we expect, this year we expect more rate cuts. However, a lot of attention is focused on, what inflation is doing in several countries, especially the advanced economies. The US, for instance. Now, why do we look at these indicators? Now, if inflation continues to pull back or continues to reduce, we would see that the central banks globally will start to reduce their interest rates. Now, once they reduce their interest rates, we would see more foreign investors, look for better returns. Apart from their home country, they'll look for better returns in emerging markets and frontier markets. And Nigeria is part of that. Now, I know before we go into, the issues we have as a country, but that is actually good because it means the opportunities are there. Now, let's look at some of the indicators in the Nigerian economy. Let's look at our scorecard. You'd see that at the start of last year, inflation was around 21.82%. But as of December 2023, inflation, worsened to 28.90%, which means that if you are making any investments, you need to pay attention to the inflation figure. You need to cover inflation. So whatever investments you're going to make would need to first of all cover the inflation, the current rate of inflation, before you can now start to make positive real return. Now, our crude oil production also was not too good in terms of our output. It was much lower. We started the year around 1.5 25% that it was at the start of the year. I think apart from every other thing here, the only thing that was a bit better was the GDP growth rate. That's for the third quarter, which is the latest filing. Basically, GDP growth rate settled at 2.54%, which I mean is not as bad as it was before. But then I mean there's room for growth, room for improvements. So generally, we're looking at what is happening in the Nigerian economy because this indicator specifically because these indicators actually impact, the performance of the equities market. Now, 2023 gave us new historical highs. I mean, we saw rights issues by 8 companies, listing of 3 new companies, 4 companies got delisted. We have 2 mergers and acquisition, and we also have some more in the pipeline. Now, let's just do a brief recap of what happened in 2023, and that would give us an insight as to what's happening now and what we expect going forward. Now in 2023, like I mentioned, if you look at this chart, you see that we separated it between we separated it into 2 parts. We have the pre-election part and the post-election part. Now, like I said, historically, during an election period, because of the election jitters and the fears that might be in the market, we don't see a lot of participation in the market. And also the fact that, for election years, we never really have major policies, that come up that year. But last year was an outlier. It was different. Now, it was different because apart from the initial move we saw in the market from the first half of the year, when the new president was sworn in, the inauguration of the new president, President Bola Ahmed Tinubu, we saw that the market started to pick up. Now, a lot of investors had improved confidence in his administration and things like that. So we saw that more activities started to happen in the market, more participation, especially the fact that he announced friendly reforms at that point in time, whereby I mean the market initially welcomed the policies in terms of the liberalization of the exchange rate and the removal of fuel subsidy. That actually push the markets even much higher. We also had the suspension of the CBN governor that, when the news actually came in, we saw investors reacting positively to that. Also, we had the fact that some foreign investors, I mean, we saw increase in foreign investor participation, especially for those that, were already in the market. Now, because of that devaluation, that actually affected the stock price valuations. So, it made what's it called now? The stock prices cheaper. And as such, people, were investing more in the market. And apart from that, we saw more money flow into the market during the second half of the year. All this actually pushed up activities. If you look at the sector performance, you would see that the oil and gas index did over 100%. The consumer goods index did about 90%. Same thing too for the banking, over 100%. The insurance and industrial goods sectors also performed quite well. The industrial goods sector was not as good as others, but then we saw that generally the market did very well. I mean, even for the year-to-date performance, the year-to-date performance was at 46%, which means that if you had invested in the overall market, you would have made 46%. I mean, which is higher than inflation that I mentioned earlier. Now, one interesting thing about last year is the fact that the market actually broke out now from the peak of 2008. Now, if you look closely at this chart, you'd see that we had the market peak in 2008. And after that time, the market has not been able to get to that same point. The market has been consolidating for about 15 years, and we can see the cycle and all. But then for last year, the market was able to have that momentum to break out from that trend. That trend that we've been seeing, and that breakout was actually remarkable. Now, what actually drove the market during the time from 2008 to last year was the fact that basically we had the impact of crude oil, and we know that our market is correlated to crude oil prices. Whatever crude oil prices do, so if we have an increase in crude oil prices, generally our market follows that trend. We also had the FX instability that also rocked our markets. It affected our market negatively. So that also pulled our market negatively, pulled it south. We also had the impact of the bifurcation of treasury bills market. We know that generally once yields in the fixed income market starts to increase, investors will leave the equities market and move to the fixed income market. So we also had that impact our market. And we also had the reemergence. I mean, that's what happened last year, the emergence of the market. That's after the 2023 elections. Now we're excited about what is happening. And before we get overly excited, some concerns have been raised. I mean, people have been asking questions. What's the difference between 2008 and now? Are we going to see a crash and things like that? But before we panic or before we spread any form of panic, there are some things we need to take note of. First of all, we have few foreign investors in our market right now compared to 2008. I mean, in 2008, we had a lot of foreign investors. Basically, they were the ones driving our market. So if during election times or during election period season, we have foreign investors exit or leave the market basically due to election jitters. They leave the market and, we can actually feel that impact. But from December 2019 till now, we've seen that foreign investor participation in our market has actually been low. And that is because, we've had issues with our FX. Basically, foreign investors come into our markets at a certain rate, they make good returns, but when they're about to leave our markets, they make losses because by the time they're exiting our market, they'll be exiting at a higher exchange rate. So the gains that might have been made in the markets will be eroded by the time they're converting how much they've made back to the US dollars. So we saw that foreign investors' participation has actually reduced. The market has had, like I mentioned earlier, cheaper stock valuation because of the devaluation of the currency. Then also, we have higher inflation rate now compared to 2008. Now, how is that important? It's important because right now, everybody's focused on making positive real return. What do I mean by positive real return? Now, when you're making an investment, you need to factor in inflation rates. Now, so for instance, if just for numbers purposes, you'd see that if you're going to invest in anything right now, you should be making at least more than 28% return. Because if you don't make higher than that, then inflation is going to eat up whatever return that might have been made. And as such, the value of your investments will be reduced or will be lower. So you need to factor in inflation. And we're seeing that inflation is much higher now, which means that investors will be more aggressive, making more aggressive moves just to ensure that they cover that 28.90% inflation rate to have positive real return. Now, in 2008, inflation was about 18.58%. So you'd see that, inflation rate at that point in time was not as high as what we have it now. Now, apart from that, we also have more informed and knowledgeable investors in the market compared to 2008. In 2008, we just had almost everybody just wanted to have a piece of the pie, and they're just throwing money in the market, whether or not they understood the market or not. We saw that a lot of people were just taking positions, putting money there and all, and taking positions in any stock. But now we have more informed and more knowledgeable investors, and we can even see that come into play right now because we're learning right now. We have more of these webinars than what we had in 2008. And apart from that, we've had renewed interest in the equities market. We have more and more people, expressing interest in the equities market because of the performance in the last couple of years. Now, how's the market performed in 2004, which is what we're looking at? You would see, from this chart says it all, basically. You would see that the all-share index, the NGX all-share index performance has surpassed the 100,000 points. Now, if you recall, I said that the highest point or the highest part that the market got to in 2008 was around 65,000 points. Now, right now, we have surpassed that point, and the market is still gaining momentum. However, we've seen that momentum has actually slowed down a bit. We have the large cap stocks that actually still move in the market. The total volume of activities are much higher than what we've ever seen, especially for the first month of the year. If you even look at the year-to-date performance, you would see that the year-to-date performance is around 35%. And for last year, like if you recall, I said for last year, for the whole year, the year-to-date return was at 46%, just almost 11% difference from what happened last year and what is happening in January. So you see that a lot of activities have been happening just since the start of this year. Now, we started to sit down to think and ask ourselves, what are the key drivers? What have been moving the market? Now, one of the things that we're seeing is the fact that the low interest rates in the fixed income market has actually been driving more people to the equities market. So we're seeing that interest rates in the fixed income markets are around 11, 12%, and we have inflation at 28%, which means that the value of investments are already been eroded. You have negative real return. Now, the equities markets provides you that opportunity to actually make fantastic returns in a short period of time. Now, let's not forget that, because for the fixed income market, you have that time factor. You have that time factor in place. So in the equities market, in just a week, 2 weeks, you can make much more than what you make in the fixed income market. We also have the high inflation rates that I've talked about several times. Then also, we have a lot of people anticipating that, there'll be better performances or better results released for the full year 2023 numbers. We're going to see a number of them coming towards the end of the month and even next month. And also we have the fact that people are anticipating that some companies might pay better dividends than what they paid last year and the last couple of years. So this is actually driving more and more people into the market. Also, the devaluation of the currency is another thing. Our stock prices have become cheaper, especially for those who are taking positions from outside the country. Also, we have the proposed listings, the anticipated recapitalization of the banks and increased funds flows generally into the equities market. These things have been driving activities in the market this month. And this is actually good. It's interesting because when we started the year, the stock prices have moved a lot from when we started the year. I mean, if you look at this table on my right, you would see that the stock prices at the start of the year and the stock prices now. I mean, a couple of them have done remarkably well. I mean, it's just a few of them that have not done too well. Now, why did we highlight these ones? Now, we did because these stocks here, this top 20, these are the top 20 in terms of the market capitalization. Now, these stocks are the stocks that will actually move the market. If we're going to see any major change in the market, they're going to come from these 20 stocks. Now, why do I say that? First of all, like I said earlier, we've ranked these stocks based on market capitalization and their weights on the markets. These stocks actually carry a lot of weights in the market. So if we see a 10, 20% increase or decrease in these stock prices, this is to actually have a ripple effect on the performance of the overall market. So we actually always look at these stocks. Now, the question that comes to mind based on, what we've seen and the index surpassing the 100,000 points is, how sustainable is this trend? I mean, is this trend going to continue like this? I mean, well, it's hard for us to say, but we know for a fact that, this trend is not sustainable and it's not fundamentally justifiable. Why? Because we're seeing that the market has rallied now for about 14 weeks straight. There has been no negative, there has been no pullback, and we know that the market doesn't move in that kind of direction. At some point, there's bound to be a pullback. Apart from that, we believe that more and more people are already pricing in the positive performance of full year earnings and the dividend that will be declared. So by the time the numbers come in, the question that comes to mind is, how high again can these stock prices go? I mean, looking at all these stock prices, you would see that if you compare this with even their performances at the start of 2023, you would see that prices have actually, the stock prices have actually moved a lot. What we advise going forward now is to adopt a cautious approach. Cautious approach in the sense that we know that the index has moved to a very high point, surpassing 100,000 points. We know that stock prices too have also moved. The question that comes to a lot of people's minds now is that is there still, value in the market? Yes, there is. Yes, there is. Why? Because one thing I always look at is to always I don't look at the markets in isolation. Now, if you look at the African markets, you would see that while Nigeria is the giant of Africa, while we have the largest GDP, if you look at our market capitalization compared to South Africa, compared to Kenya, you'd see that we still have a lot of room to grow. I mean, for South Africa, for instance, now the market capitalization is almost $1 trillion in dollar terms. I mean, for Naira, we're still working up our way. So you see that, there's a lot of room to grow. I mean, there are a lot of opportunities. And with the fact that, we also have more companies that are planning to list on the exchange. I mean, this year, one of that is Dangote Foods, for instance. We know that they're planning to list this year. And I think that that's one opportunity that, we should all take advantage of. We shouldn't, we shouldn't wait until the market has actually moved and dust has settled before we now start to, take positions. I mean, once the information breaks, I mean, we're going to push that out. And we believe that once you get it, please take advantage of it because you stand to benefit. Looking at a lot of the other indices in the market, I mean, technical indicators, those indicators are already telling us that, see, right now the market has gotten to a very high point and a reversal is near. So we need to be careful. I mean, going forward, especially at this point, we need to adopt a very cautious approach to the market. What do we expect in 2024? I mean, we expect the CBN to maintain a tight monetary policy stance. We expect the federal government to intensify tax collections. We expect the policies this year to be geared towards promoting private investments. We expect the recapitalization of the banking industry. I mean, as mentioned by the CBN governor last year. We also expect, more capital raising in the markets, mergers and acquisitions, and a couple of other things. Now, while we're looking at these things are actually going to inform, what stocks we need to look at. Now, looking at them based on, the last comments, there are some stocks that, have, are on our list or on our watch list, and we're recommending those stocks to everyone, because these stocks have met those criteria that we mentioned earlier in terms of, the banking recapitalization, in terms of, the energy capacity increase. We know about Transcorp and the acquisition of Abuja Disco and things like that, and the probable listing of Transcorp Power. We also know about the banks and the fact that, we talked about the listing of Dangote Foods. I mean, and we know that Nascon, Dangote Sugar, Dangote Rice will be merged together to form Dangote Foods. So anyone who is actually taking position in these stocks would stand to actually benefit. Now, one thing that we need to also pay attention to is the fact that, like I mentioned earlier, we've gotten to a really high point. We need to trade with caution. Now, if for those that are not in the market or for those that don't have much experience in the market, this is actually a point that you need to pay so much attention to. Why? Because you don't want to be caught in the market, in a position when the market has started to pull back or is starting to retrace. What do I mean by that? Now, when you take a position in the market, you're actually supposed to have your target entry price, target exit price. At what price do I want to, get into this stock? At what price am I going to exit? First of all, is this company fundamentally sound for me to even invest in? These are the things that you need to pay attention to. So navigating the thin ice basically is about some steps, some approaches that you can take that would help you not maximize your returns during these times. Now, first of all, I'll start with buying only fundamentally sound stocks and not just following the bandwagon. Now, we've had instances whereby people are just buying a particular stock because they've heard that, something is happening here, or somebody else is buying. No, you only buy a fundamentally sound stock. You buy those companies that you're actually sure of and that you have some information and that you believe that they have good prospects going forward. You buy only those stocks. Why? Because if the stock prices rally to a certain point and the fundamentals can't match up to that rallying price, you would see naturally the stock prices will start to fall, start to decline. So if You buy a fundamentally sound stock and you can see growth in their revenue, we can see increase in their assets and proper financial management of their finances, you'd see that the prices that we're seeing in the market will be able to match up with, the company, because when it comes to matching up their numbers with their performance in the market, you would see some form of alignment, because we are seeing growth in their revenues, we're seeing growth in their top line, their bottom lines. We're seeing that, in terms of their expenses, they are managing their expenses quite well. I mean, that will match up. So those are the kind of stocks you buy, you focus on. You also need to take advantage of risk management policies, such as your take profit and your stop loss. Now, one of the things that we've seen over time is the fact that people actually take positions in the market and just leave it. During this time, in line with trading cautiously, you need to actually trade the market. Now, this is one mistake that a lot of people have made in time past. They actually just invest in the market. Now, investing and trading, they are two different things. Trading is actively buying and selling. Investing is taking a very long position. While there are advantages to taking a very long position in the market, you should also note that with the volatility that we're seeing in the market, it will be better for you to trade the market. Enter at a particular price, take your profits, determine the return you want to make, take your profits and exit. Now, you should also need to have a stop loss. What does that stop loss mean? Stop loss means that is about deciding how much losses you're willing to take after taking a particular position. So for instance, now if you buy a particular stock and it doesn't get to the target price that we anticipate it to get to, and it starts to lose value, you need to tell yourself that, okay, you know what, I'm willing to just lose 10% maximum of this value. And if it loses that 10%, you need to sell it and not stay there. Because one of the things that we've seen is the fact that people say, oh, no, don't worry, it will reverse. Oh, don't worry, it will turn. And people lose a lot of money when you could as well stop the loss, take another position and ride that that trend or that wave in the other stock. So it's always good to, take your profits if you've made some form of profits, like the way the market is right now. Some investors have already made profits. Take the profit. The profits is always it's better for you to take the profit now. Why? Because the profit you're looking at on your computer is not profits in your bank, or it's not profits in your account. When you book the profits, then yes, it's profits to the bank. Because I've seen a lot of instances whereby people will say, oh, I've made 20-something% return, 30-something% return, and they don't take the profit. They're just watching. And before you know it, that value starts to erode. And next thing, they now take profits when they've made only about 10% or even 8%, when they could have booked 30% or more. So it's always good to take your profits. Let's not let's manage our greed and fear very well. Now, the liquidity of the stock is one thing that we also need to pay attention to. Now, there are some times that you would see that the market is on full bid, the market is on full offer. We need to actually pay attention to that, because once you open your trading platform, you would actually see that. You would actually see the volatility, the volume of transactions that are happening on a particular day. We need to actually look at that, because once you start to see more people selling, I think that would give us an indication that, you know what, this is a good time for me to exit and just, take the profit and leave this stock and move on to another one. Another thing is the corporate actions. From time to time, we always send out notifications. We always push out information about, what's happening in the market. We need to actually pay attention to it. These times are not the times where you ignore emails or messages from your stockbroker, because, say, like I mentioned at the start of this presentation, information is key. Only those that act on the information are the ones that will benefit, faster or earlier than others. Now, we also need to pay attention to trade alerts. From time to time, we always send out trade alerts. We send out via email platform or the Telegram platform. We need to actually pay attention to these trade alerts, because we have professionals who are actually watching the market. And when they see a particular trend or a particular pattern, or they see something brewing, we notify our clients to let them know what is happening so that they can actually take advantage of it. This is the time that, we need to actually pay attention to the emails and the communications that actually come from the firm, because this is what will make the difference between those that will make profits and those who would be left wishing they had made moves. Then we also have the investment advisory and managing grade and fair. I talked about that already. This is the time whereby we actually need to ensure that, see, you know what, if you've made some form of return, book your profit. Because when the market starts to turn, when the market starts to pull back a bit, we're not going to get, how do I put it now? Nobody knows. It's just going to happen. And those that have actually booked their profits are the ones that will be smiling to the bank. And at that point in time, if you've already decided on the stop loss, what rate you decide or how much loss you're willing to take, once it gets to that point, just close your position and move on to another one. Now, one thing that I'm always excited about is the fact that we're always here to help and to guide and to provide information. Above that, or more importantly, we have our platform that we can use to trade. We have the iInvest platform, and and I'm not saying this because I work here, but the platform works, and the platform works well. If you want to benefit a lot from it, you need to explore the various options and the various capabilities that the app provides. At this point in time, I'll pause and I'll let Ibilola take it up from here. Thank you.
Thank you, Sean. Thank you, Sean. That was, even though I work in the space, it's always nice to still come back and hear this information, because a lot of things are happening, and sometimes you need someone to sort of draw your attention to the fact that there are these opportunities in the market that you, even while you're in the space, you still don't get to see. So thank you for the presentation. For those of our listeners who aren't iInvest customers, Mercy at the beginning spoke about us being the digital partners for Parthian Securities, and Sean also has sort of alluded to iInvest in his conversation. And so I'm just going to do a brief talk about iInvest for the sake of those who aren't users on the app or have joined us, to know what this is all about. The iInvest is a safe and secure platform that offers a range of financial service products for investors, people who are looking to invest. We have a range of savings, investment options, and the platform is essentially available both as a mobile app. So if you have a smartphone, you can join via the channel, or it's also available as a web app. So if you're not opportune to use a smartphone, you can as well, utilize the web app to transact on iInvest. In Sean's presentation, he talked a lot about equities and what's happening in equities. The focus was on equities, really. And so that's definitely what I want to tell you, that if you're interested in joining, if you're interested in purchasing equities, you can definitely do that via the iInvest app. It's pretty simple. Once you've downloaded the app, you submit your KYC. That's usually needed because we need to open a CSS account for you. That is what allows you to actually trade on the NGX. Once you've submitted the KYC documents, which are usually the same documents you typically asked for, either you're opening a bank account or the likes, and those are approved, your CSS account is open for you. Typically within a day or two, you have that, and then you can go in and transact. And a lot of the trade tactics and things to look out for when you're trying to trade, like, wanting to set yourself a target entry price and a target exit price, these are things you can sort of do on the app as well. You can put in the price at which you want to go in, so you can actually control where you're buying. That way, if you've made a plan as to how much you were expecting to make on a trade, it's easy to stick to it because you're not then going in at a different price, and you can plan ahead. So the same way you can actually plan, the price and try to stick to purchasing at a certain price is the same way you can do that when you're also looking to exit. So pretty easy and straightforward. And unfortunately, we are not taking comments from, I guess, some of the participants, but I'm sure that some of our iInvest users can attest to that, who are on the call. But aside from equities, what are the other things you can do on the app? We know that equities are a bit of what we call a riskier asset class, really. So you have the less risky investment options in the form of tenured instruments. So you have things like a fixed deposits, which you can buy, typically offered by your banks, the various kinds of banks, commercial banks, microfinance banks and mortgage banks. You also have asset managers also offer some of these sort of products, and all of these are available on the app. You can, go on the app, look at what the offerings are. They typically have different tenors. So, some people want to invest for a short period of time. There are you have options that will cater to your need there. Some are more interested in doing something a bit longer, maybe because they don't need the funds just yet, or they're planning towards, a goal in the future. You can do something a bit longer as well, and you can see what your return will be on those investments from the get-go. So it's easy to plan accordingly as well. We also have commercial papers and treasury bills, similar sort of products, but just one offered by the federal government in the form of treasury bills, and the other by various institutions for commercial papers. Also tenured instruments, meaning that there is like a fixed term that you're holding it for, but with our treasury bills and commercial papers, you can actually pre-liquidate after a certain minimum period of days, whereas our fixed deposits are typically held to maturity instruments. I know that everybody's aware of what's happening with dollar and the exchange rates rather. And so people do, as much as they say, oh, don't hoard and all of those, we actually do have people who have legitimate needs, their legitimate reason to actually require USD, and their needs might not, their expense might not necessarily be today. So we do have options for our investors who would like to save in dollars on the platform. We've got fixed deposit options. We also have Euro bonds, which are, they are technically bonds. We've got federal government of Nigeria Euro bonds on the app, and we've got fixed deposits. Both are a bit restrictive in terms of the term to maturity. But with Euro bonds, what you do is you do get periodic coupon payments that are payable biannually. So every 6 months you get that. And so that is a channel or an avenue for you to sort of plan towards your liquidity needs when you're doing dollar investments. There is also, so for this, we have the savings option as well. So we do understand that not everyone is going to be able to sort of put money aside in a lump sum at the start of their investing journey. And we've got the savings option, which allows you to save periodically. You can also do a one-off savings, but as we know what savings are, they're supposed to be quite simple to use, pretty flexible, and you can put in literally any amount into that. So our savings option offers all of this in terms of how frequently you want to save. Would you rather do it one-off? Would you rather set a standing debit on your account so that you're debited for a certain amount periodically? So there are those options as well for people looking to invest. And we recently launched ethical investment. This is something we haven't had before, but we do pride ourselves on wanting to be an inclusive platform, meaning that we have something for everybody. So we have recently launched the Mudaraba term deposit, which is a form of ethical investment, and it is essentially a Sharia compliant alternative to what we know as our traditional fixed deposit. So it runs a bit similarly to the traditional fixed deposit. You put in the money, it's held for a period, and after the period, you get back a profit. In this case, because of the nature of the investments, the profits are not necessarily fixed, but I understand that that investors who like to invest, in accordance with their faith, understand what this is and how it works. So the return that you're eligible to get is actually not a fixed return. It's not cast in stone, but you are eligible to earn a profit based on the utilization of the funds by the institution that is offering the product. I think I've sort of covered all the products that we do have on the app. There are other things you can do, things like buying credits, buying airtime, just your lifestyle products. So you have some idle funds in your wallet. You can use that to just, top up your wallet or buy data. But that is it really. And like I mentioned, in terms of signing up on the app, pretty straightforward. You go to, it's available on the App Store, the Apple Store, and it's also available on the Google Play Store. So you can search for iInvest in there. You can download the app. Registration is pretty straightforward. You also don't have to do everything at once. So you can just download, register, and then come back, get an idea, look at what we have, get a feel for the app, get a feel for what is offered, and you can come back and then complete your KYC and go on to invest. So thank you, and we do hope that you will take an opportunity after the session has ended to download the app and join us on a great investment journey, essentially. Thank you.
Thank you very much, Ibilola. Thank you, Sharon. I mean, I think it was pretty detailed and very insightful. I had a thing or two to, just pen down. I hope that our audience also find this very insightful and useful as well for our investment decisions. I'm just going to go straight to the chat box now to check if we have any questions for our speakers. So I'm just looking through. Okay, so I have one question here. Sharon, this question is for you because it has to do with, I think when you mentioned that the CBN governor, the former CBN governor, was removed and the market sort of reacted positively to that. So yeah, the question says, why are investors reacting positively to the suspension of the CBN governor? That's Godwin Emefiele, not the new one. Talk about that.
Okay. So basically, based on the information that we had, we know that a lot of policies that the former CBN governor implemented were not actually favorable to a lot of market participants. So his removal actually meant that, or actually gave a form of hope that, okay, you know what, we might start to see some favorable policies come into play. So once the news of the suspension came in, the market actually embraced it with open arms. So I believe that is I believe that was the main reason.
Okay, thank you very much. I hope this answers the question. Okay, trying to go through. Okay, so someone has a question. It says, it would be nice to know what's driving Dankson price upward. I'd just like to add that it was a bit, the rallying has slowed down. As of yesterday into today, it has slowed down. But Sharon, it's your question. Let me not take it from here.
No, we can learn. I mean, just give us your thoughts. I mean, ideas don't flourish in isolation. What do you think?
Yeah, sure. Okay, so one of the things, or the major reason why the Dankson price rallied, or we saw the rally that we saw from, I think, mid last week into the new week, had to do with the news regarding Otedola, Femi Otedola acquiring about 5 million units, right, in Dangote Cement. And according to his publications on Monday, he said the reason why he bought that was because he had confidence in Dangote that he was going to be able to generate FX, into the country. So now, of course, when you have someone like Femi Otedola purchasing that or that volume of unit in a particular stocks, that kind of sent a positive trigger or a positive trigger to the market, and everybody just wanted to jump in. And this is sort of what we are talking about, the bandwagon effect, because sometimes, you pick sentiment and you take actions and you don't really do your own research to find out why is every other person buying the stocks. And yeah, he rallied, but as of yesterday, the steam is thinning out. Yeah. So I don't know if that answers the question. Or Shay, do you have a thing or two to add to that?
No, that's fine. That's fine. Thank you. Somebody has
Okay.
Mr. Olukayode Kimbinu.
Okay. There's another question. Can we? Okay, Ibilola, this question is for you. It said, I'm guessing this is a new customer. It says, on the iInvest app, can we trade ourselves live or we submit our requests?
No, can you say that again? Can we trade? Is that what he
Yes,
mentioned?
so meaning, do you have direct access to the live NGX market, or we just get to place bid on the app and then, it just...
So they obviously they're not going to see the NGX trade portal or anything, but what happens is when they place their trade on the app, it is actually routed to the NGX to be executed.
Thank you very much. Okay, so the next question. Okay, Ibilola, this is also for you. It says most of the dollar investments minimum subscriptions are very high. Are they plans to make them affordable for the common man?
We're definitely looking into that. We do want to make it affordable, but we also understand that because it's USD, when you're comparing return ranges on dollar denominated products compared to our Nigerian or local currency investments, there typically the gap. So on your Naira investments, you can see double digits 11, 12. On dollar denominated investments, it's more of 4, 5, 6, 7-ish kind of returns. And when you look at that, sometimes return wise, it almost seems very intangible. We understand that obviously little drops make an ocean, but we also want a case where when you're making investments and you are seeing returns, you actually do get a sense of fulfillment with the investments that you've done. But that's not to say that we are not looking into options to make it more available, more affordable in terms of the entry point for investors. So we're definitely looking into that, and it's something that will definitely be communicated once it happens.
Thank you very much, Ibilola.